Hi, everyone. Just before we get going, I want to remind you that everything we talk about and discuss should not be considered as investment advice. The purpose of what we talk about on Catherine Murray Media and Markets on YouTube, as well as Catherine Murray in Conversation With on my podcast, should be viewed as informational and entertainment purposes only. Please definitely do your own research, your own homework, and definitely consult an investment professional before making any investment decisions. And also to note, some of us might hold positions in some of the stocks that we discuss. Dave, great to be able to catch up with you as we think about investing and really where the opportunities are today. And I really think, and I'll say it again, it has been and likely will continue to be a stock picker's market. So, we're really kind of trying to focus on ideas that will help generate money for our viewers. So thanks for being with us, because I know that that's kind of how you also invest, correct?
Absolutely. Good to see you again, Catherine. I mean, I'm a stock picker, so love chatting about ideas and absolutely. I mean, the interesting thing in markets today is, there's a lot out there. So there's always something to do, in the words of Peter Cundall. So it's just when surveying the landscape today, we've seen a lot of volatility in the past 12, 24 months, and volatility is great because it always gives us opportunities to find new ideas to be invested in.
Okay. And before we get into those ideas, do you have right now a view of the macro world? How much does that impact your, your investment process almost?
Yeah, I mean, we're far from macro investors, so I'd caution anyone on taking our macro advice. But I mean, the way I invest, I'm very focused on the small cap market. So we're trying to find opportunities where businesses are in the earlier stages of addressing really big markets. And so one of the things we're always trying to identify is where we're seeing the big tailwinds, which in itself is more macro than company fundamentals. So for us, our macro picture is always trying to find businesses where we see long-term demand growth, changing dynamics within industries, and really identifying those businesses that can capture the tailwinds. And so what you see in our portfolios is we gravitate a lot more towards technology and healthcare, newer business models and newer industries.
Okay. And can you just talk, before we get into some of the ideas, a little bit about those tailwinds? Like when you think about healthcare or technology, what about it is promising in terms of the tailwinds? What's exciting?
Yeah, I mean, obviously with the onset of the global pandemic last year, we saw this massive shift towards work from home, and everybody's now talking about their return to office strategy. But what the pandemic has done is it's rapidly increased the adoption of a lot of different technologies, and we've certainly seen that with the rebound in the NASDAQ and a lot of people understanding various technologies. Revenue growth was going to ramp up quite significantly. But we're sitting here today, and we think we're still in the early innings. Like, a lot of companies are still heavily investing in their infrastructure to build out a more complete hybrid model. I mean, we're doing this interview. I'm in my home office and we're on Zoom. I mean, wouldn't have thought we'd be doing this 2 years ago. I mean, it's amazing how fast technology has moved to address the current situation. And I think there's a lot of advantages to the way the world is now. There's obviously a lot of disadvantages, so I don't want to make light of that. But we see a lot of these tech trends continuing for quite a while. And so when we look into our portfolio, it's a lot of companies where we've got the real estate industry being disrupted, and we think that's going to go on for the next decade. We've got payments being disrupted. We see that going on for the next decade. Online commerce. I mean, prior to the pandemic, I didn't buy groceries online. Now I think buying groceries online is fantastic because it saves me an hour every time, and going to the grocery store, walking around, and parking and everything. So it's a lot of these the changes in behavior by consumers and businesses is really just the tip of the iceberg here, and we're probably inning 2 or inning 3 of these tech tailwinds.
Got it. And we'll go into some of those details. But within healthcare, again, kind of from that macro tailwind perspective, what's interesting there?
It was, I mean, one of the big tailwinds we saw was how care was delivered. And what we'd, particularly in Canada, less so in the United States, we had this, we had an environment where, you had patients who were kind of stakeholders in the primary care equation. You had doctors, but then you also had clinical and hospital administrators. And it was hard to get everybody aligned on how to do things more efficiently. There'd be points in time where hospitals would try to, and clinics would try to adopt technology, then the doctors would have nothing of it. Other times where, patients just, they didn't want to use the technology. And really the global pandemic forced a convergence towards telemedicine. And it was already, telemedicine itself was already being adopted in the United States and other jurisdictions around the world. But we've obviously seen massive uptake in Canada here in the last 12 months. And it's been a tailwind for companies like TELUS through their TELUS Health division, but Well Health, which has been a long-time portfolio holding of ours.
Okay. I always wonder though, with the telemedicine, I always wonder about the satisfaction level amongst users. I think that's been a big issue over so many years. So what's really changed there?
I think as doctors get more comfortable with it and how you can practice, and it's certainly, if you've got a gaping wound on your leg, it's hard to do that on online. But there's a lot of simple things where you have to go in for a prescription refill, or you need to do that first diagnosis so you can maybe go to a specialist. There's a lot of strong use cases, but conversely, there's also a lot of use cases where nothing's going to beat going face to face. And so as the decision trees get, and when you're going into telemedicine, you're generally filling out a bunch of forms. And as that triage AI decision tree gets more precise, it's going to improve the patient experience quite dramatically. But I mean, whenever new technology is adopted, there's always some heartache.
Yeah, absolutely. Let's go down some of those paths that you mentioned as it relates to real estate for one, and what's changed because of the pandemic and perhaps more use of technology. Specifically, what areas within real estate tech do you like?
Yeah, and we've been big supporters of Zillow for quite a while. So, obviously a large US tech company. And I mean, it's interesting when you see S&P 500 and NASDAQ hitting 52-week highs. We're looking at Zillow and it's 50% off its 52-week high. So when you're trying to kind of circle the square and find opportunities within tech, which are reasonably priced, we see a company that's 50% off its highs. But what Zillow's trying to transition the real estate industry. I mean, I think when the real estate industry and the general commission structure for real estate agents came into place, taking a couple percentage points made a lot of sense because the value of homes was a lot lower. As we've seen massive real estate price increases, all of a sudden these smaller commission percentages are pretty large amounts. And so there's a lot of value kind of in the sales model that's kind of slipping from the buyer out of the buyer and the seller's hands, where there's an opportunity there for tech to disintermediate that. And so I mean, Zillow's had their now where they're buying homes directly, and it's with the pandemic, it allowed people to try these things and get comfortable with it. I mean, if you would have told me you might buy or just sell your home online with nobody ever seeing it a couple of years ago, I probably would have thought you're a bit crazy. But now, people have tried it out, and it's pretty compelling for a seller. I mean, if you're going to sell your house, Zillow's got really strong data on how much houses are worth in that area, and they can make you an offer, and it's going to be 6% below what they think they can resell it for. But I mean, you don't have to stage your house. You don't have to hire a real estate agent. You don't have to have people, walking through your house, whatever, and making plans to leave. And, that friction is a pretty big roadblock for a lot of people in actually selling their homes. So Zillow's brought together, utilizing their historical data on real estate prices and providing value to the potential home sellers And, you know, certainly in the US, if anyone starts looking for a house in the US, they go to Zillow. So they've already aggregated demand for houses, and now they've found a way to actually dial into the supply, and the markets they're in, we're seeing really good traction. And so it's, you know, it's pretty early innings of breaking down an industry which has historically been really hard for technology to get into.
And I haven't looked at Zillow in a number of years, really. I mean, it's been around for a very long time. Why is it down 50%?
I mean, it is a battleground stock. I mean, a lot of people will just say, you know, we're never going to buy and sell our homes online. You know, there's obviously there's a lot of vested interests. So a lot of people will be fairly negative on the business model because it you know, it eats their cooking. There's been short reports on Zillow over the years. So there's a lot of people saying, well, they're using their balance sheet to finance all this, and if there's a real estate downturn, it's really risky. And the unit economics are pretty skinny, like they're not making much per house. But you know, what we've seen is the CEO, Rich Barton. I mean, he's built, you know, a few other like massively scaled tech companies. So, you know, here we think there's a high probability that he's going to figure out the economics here, because there's a lot of other things you can layer into the business model. You know, not only is there the real estate agent commissions that are in the middle, there's a whole bunch of ancillary services post house purchase, where they're going to be able to actually add to their incremental margins from every transaction.
And speaking of ancillary businesses and tech and real estate, I'm wondering, have you looked at or own Real Matters and or Voxter?
Yeah, we've looked at both companies. We currently hold Real Matters. I mean, it's you know, we've been involved with the company on and off since a little after their IPO. We recently repurchased a position in the company, and you know, I think it's got a wonderful technology. I mean, and you kind of see the market share they're getting in one of their markets, and the real question is, can they actually get into the title market in a big way? We think where the stock's trading today, you're not taking a lot of risk on them being able to execute on that. So it's a pretty interesting opportunity. And again, I mean, it's kind of along the Zillow lines where this is something else. It's, I think about 40 or 50% off its 52-week highs. So, you know, it tends to trade quite a bit with refinancing rates down in the US, because as transactions pick up, revenue increases. I think when you take a longer term perspective on this company is just going to get a larger percentage of every single real estate transaction. And 5 years from today is going to be a more dominant, more profitable company than it is today. So we like taking these opportunities to add to it.
Okay. And the gentleman who was one of the key people behind Real Matters is also the founder behind Voxter. Same kind of business. Yeah, it's
similar business. We generally like to watch companies for a while before we invest.
Got it. Let's take a look at the payment business as well. You mentioned that as an area that you see some continued transformation in, just given the pandemic. Specifically, what on the payment front?
So on the larger scale size, we initiated a position in Square, I think last March, April, in the middle of the pandemic, just recognizing that more payments were going online. And you could also see, you know, small merchants had to figure out how to move online and continue to operate in a really challenging environment. So I think with what in the last 18 months, we've seen a big movement towards online payments. And, you know, Square's been a pretty aggressive leader in the space and launched their Square Cash App about a year ago, which really becomes a wallet for a lot of consumers. So like we're in Canada here, we obviously, we follow the Canadian banks pretty closely, and they've had a very protected position over the years. So it's hard to think of banks being disrupted as a Canadian. But when you kind of read the commentary from the larger US banks, I mean, they're really concerned about the financial of or the future of their businesses and the impact a lot of these payment platforms and transactional platforms are having on them. And I mean, then you kind of you go from looking at a Square in the U.S. and I mean, we're not shareholders of Shopify in Canada, but I mean it's a wonderful business which is allowing small merchants to move online. And I mean, there's companies that moved to Shopify, pre-pandemic or early stages, fared so much better than traditional retailers or smaller retailers that didn't make that move. And so the Shopify platform really enables businesses to ramp up in what we think is going to be an ongoing trend tying into our online commerce. And so none of this is possible without the back end financial transaction, the processing network to support it.
And so who plays into that then?
So I mean, obviously, Lightspeed's been a big winner. I mean, it's more on the payment side. But I mean, I think on the transactional side, I mean, I think when you start looking 5 or 10 years out, I think that's when we start to see cryptocurrency playing a bigger role. And I mean, one of the aspects we really like about Square is, even though it's not a crypto-based company, their platform does support crypto-based transactions. And we think when we start to look at disintermediation of the financial sector, you're tying in crypto with some of these larger platforms like a Square, we start to see the possibility of it.
Okay. And I normally save my crypto questions for the end, but since you brought it up, how are you involved in crypto of some sort?
We have small weightings towards it. I mean, I think when we look at the space, this is going to be polarizing right out of the gate here, but I mean, there's a chance that crypto does replace some or potentially a majority of existing forms of cash and cash transactions. And if you're not open to that, I think you're potentially, you're entertaining a lot of catastrophic risk in your portfolio and your investments, because there's a probability it does happen. There's also a probability that it does not happen. And the reality is nobody knows right now, but there's a lot of fundamentals in place where we think the probability of crypto becoming more mainstream has increased quite dramatically. And I mean, you look at Jamie Dimon at JP Morgan. I mean, a couple of years ago, they were firing people who even talked about Bitcoin, and now they're openly embracing it within their banking network. And so I think what we're seeing is widespread adoption and understanding of how cryptocurrency is, because of the inherent advantages of it, it has the potential to be very disruptive. So I think the larger financial institutions and governments are now scrambling to try and get ahead of it so that it's not disruptive to the way governments function and monetary policy around the world.
And is there, how are you playing it though? I mean, are you just going out and buying Bitcoin in your own wallet or using one of the funds? What do you think?
Yeah, I mean, in our funds, I mean, we would say Square's kind of moderate Bitcoin or crypto exposure. My partner Felix made an investment in a company called MicroStrategy. It's a U.S. company, and I mean they've got a ton of Bitcoin on their balance sheet, so it's a levered proxy for Bitcoin. In small cap fund, I was an investor in a company called Big Digital Assets, which we really liked it because it had some software around fraud detection and contracts with government agencies. So it had this an established business in the space. They also had a crypto exchange, so it provided some optionality for us if the exchange they were applying for regulation. If they become one of the first regulated crypto exchanges in the country, could be a nice win for us.
And
It's already been a bit of a nice win for us.
That's interesting. So, and Dave, I should have asked in the beginning. Well, I mean, you do have U.S. companies, but what's your exposure to Canada versus the United States? Big digital assets, I'm not familiar with. Where does it trade?
Yeah, it's a Canadian-based company. So, I mean, the small cap fund I manage is always kind of 80 to 90% Canadian with a little bit of US layered in, because I shy away from the resource sector, focusing more tech, healthcare, consumer products. So generally to round out the portfolio, we find a few US names, but we across the firm, my partner Felix focuses a bit more kind of global and US and larger market cap than I do.
It's interesting, you know, when you really think about perhaps what the Canadian small cap opportunities are, because they don't get a lot of airtime. But yet I'm sure that you've invested in a lot of these small cap Canadian tech companies that became large cap. So it's probably interesting homework to do.
Yeah, I mean, when you get it right, it's really rewarding. I mean, we participated in the Dye & Durham IPO, and you know, there's a stock that went IPO'd at $750 and it's trading $46, $47 today. So you know, when you get a small cap right, it drives a lot of returns for your portfolio, and you know, we've seen a lot of over the last 3-4 years in particular, a lot of small cap managers they've shut down, they've wound up their funds, they've moved on. So there's a lot less eyeballs on the small cap space than there was 5 or 10 years ago, and the less people that are actually looking to invest in these companies and digging in and understanding the businesses, it creates a lot more inefficiency, which creates the opportunity. And then when we see when these small cap companies actually, you know, hit the growth trajectory and, you know, as they build in size, you know, if they get to, you know, if they get to 500 million, the all cap managers start looking at it, they get to $1 billion, the large cap managers. So you get this natural larger following. And so you start to see not only the growth of the underlying business, but then also the multiple expansion as it goes from being rated as a underfollowed small cap company to a well-loved large cap.
Right. But why do you think, I think people would be wondering why so many small cap managers have closed up shop?
It's been a really challenging performance environment. I mean, we saw, you know, 2018, I think small cap indices were down kind of 18%, but large cap indices were up. And I mean, even, you know, in the last kind of 6 months, we saw the small cap market peak in February, March. And since that point in time, I mean, the Russell microcap index has underperformed the S&P 500 by about 20%. I mean, you underperform large cap stocks by 20%. It's hard to convince people it's a great place to be. So there's been a lot of performance challenges in the space.
Understood. I just wanted people to understand that, but you know, that at the same time, there's a lot of opportunities too. Talk to us a little bit about another company that I believe you own, WeCommerce. What is that?
Yeah, WeCommerce is a company that came public in December of last year. A couple of people in the tech software space I've followed for quite a while, and they started acquiring companies which provide ancillary services and products on the Shopify network. So we've got all these merchants flocking to Shopify, but the actual partner ecosystem. So if you want to, you know, customize your storefront, tie into your Instagram accounts for easier sales and whatnot, there's all these little plugins you can add on, which makes your Shopify store more appealing, easier to transact on, makes it easier for you to tie into your back end and in your operations. There's all these little things, and when we think Shopify is a company that's going to grow for a really long period of time, and to be attached to that platform, it's very reminiscent of what we saw with Salesforce. And Salesforce launched their Force.com platform, gosh, probably 15 years ago now. And there were a lot of companies which just sold, you know, different modules and very like different products on top of that platform. And that ecosystem expanded dramatically over the past 15 to 20 years. So I think what we're seeing today with WeCommerce, operating on the shop, selling additional services on the Shopify platform, in the very early innings of a long tailwind for Shopify. It's a pretty interesting place to be invested with. I mean, if you get a chance, follow Andrew Wilkinson on Twitter.
Okay.
Just super thoughtful guy, and really focused. I mean, him and his partner Chris, they've got bronze statues of Warren Buffett and Charlie Munger in their office, which is interesting for tech CEOs who are growing companies to really have that strong value discipline. So, we think their combination of their operational experience, knowing how to optimize the operation of these technology companies, as well as knowing how to buy other companies and integrate it onto the platform. We think it's a pretty strong growth window for the company.
2 follow-up questions. Are they profitable? I don't know this company. I haven't looked at it. So are they profitable? And then who do they compete with? I have to believe there's a lot of competition out there.
Yeah. So we profitability, we think, it's looking very good for the next 12, 24 months. Their financials are a little convoluted. They've made a couple acquisitions, which make it challenging to understand, but given the parameters around the acquisitions they've made, and they made one substantive acquisition, we think they'll be nicely profitable. Their competition is a lot of kind of one-off creatives who have built stuff for the Shopify platform and then started to monetize it. But what they do a good job is they build relationships with these creators, and it gives the creator the opportunity to join WeCommerce and run their business, but not focus on the business aspects of it. Focus on the product, because a lot of these software developers, their love is creating great product for their customers, and they're not as tuned in to ramping up sales and marketing side or driving EBITDA margins on the backside. And that's really the part of the value equation that Andrew and Chris bring to the operators who decide to partner with WeCommerce and join that business.
Okay. Let's take a look at another name that you own. I'm not familiar with this. So these are the micro cap names that you're giving us. So, which is great. Sangoma?
Yes. So Sangoma's in the unified communication space. And again, kind of the everyone working from home, having the need for being able to transition your phone line from your computer, your desk at your office, to your computer at home. So basically having a soft phone and having the back end plumbing that supports all that. If you look in the US, there's a couple large companies in the unified communication space, Twilio and Ring Central. I mean, any people who are investing in the tech space will know those companies incredibly well. Sangoma is, competitors to those companies, but focused more on small to medium businesses who are looking for a solution. And it's a business that's, we've followed it since it was truly a micro cap, about $10 million market cap. I think it's $400 or $500 million market cap today, and trading at a pretty steep discount to what their US peers are. So I think the company's looking to list down in the US here in the next few months. So there may be a re-rate opportunity there as more US investors start to look at it. But really being in that unified communication space, so companies can have all their telephony, messaging, all in one place.
Interesting. And then what's the other name that you gave us? Pranter?
Pronto Forms.
Pronto.
And another in the microcap space. Kind of in the, I think it's $100 million market cap today. And what they do is they have a low code solution for field services automation. So if you think of like the meter person going to the side of your house and reading your gas or electric meter, a lot of those meters have been automated, but a lot of times you have to do a visual inspection. And when those people show up at your house, a lot of times they're writing things down on paper, or they're banging it into an Excel spreadsheet on a laptop they have with them. What Pronto Forms allows is the company to design a custom application. The field service worker can then download it and enter the data in real time, and it immediately populates their backend database. So it really streamlines the field service worker It improves the safety of the field service worker because they're not spending as much time on site. So it's yeah, and again, early innings in an industry. Part of what's really attractive is you don't need a software development team in-house to build out these apps. I mean, we've built out a couple apps internally for our own use, and we don't have any software developers on staff at Pender. So it's super easy to deploy, which is a big part of the value proposition for them. And they've been scaling into larger enterprise customers. And what we're finding is once they land a large enterprise customer, they're able to expand into other parts of the company. So we've seen the company growing at high teens over the last couple of years, and we would expect that to continue and if not accelerate.
Dave, that's interesting. So wait, when you say that internally you're able to create an app, correct?
Yeah. So it basically it's a low code solution, and what that means is you don't need a software developer to build the app. It's very forms based, so you can create these customizable forms that are really easy. It's easy to create them, and then they're also very user friendly for whoever's inputting data into their mobile device.
So you use Pronto Forms to create your own app?
Yes. Yeah,
Is that right? Or I'm just trying to understand exactly what it is, and I guess which industries this will fit well.
Yeah. So I mean, their normal use cases in oil field services, so electric utilities, gas utilities, other people going out into the middle of nowhere to monitor oil and gas rigs.
Yeah.
For us, we used a low code solution, not Pronto Forms, for our trading. So we can enter all our trades remotely, and it goes into our order management system right away.
That's interesting. Didn't know that we could do this. I thought I did need to have a software person handy. There's software so that you don't even need a software person. That's what I'm learning. Is that fair? Yeah.
Yep.
That's amazing.
Which is great for companies, because a lot of companies don't want to make the investment of having a whole bunch of software people on board.
Yeah, absolutely. And what's the ticker for Pronto Forms?
PFM. So Peter, Frank, Mary.
And it trades where?
TSX Venture, I believe.
Okay.
Yeah.
Interesting. Dan, we're going to wrap it up here, but I thought maybe kind of a final word of advice that you can maybe give our viewers is, when people think about, investing in small cap or micro cap or what have you. I mean, you always kind of hear at cocktail parties, or have in the past, have you heard about this stock? Have you heard about that? And so much of the time, I mean, unless you're a real professional, the stocks go nowhere. That's being kind. So what might your advice be to individuals who are thinking about small cap companies, believe in buying into that?
Yeah. So, I mean, the micro cap and small cap space is one of the few parts of the market where an individual investor can have a big advantage over an institution, because a lot of institutions, their funds are too big and they're just not going to be looking at $100 or $200 million companies. The key is to do your work. Make sure you're actually investing in a higher quality company, not promises, but be investing in businesses. And I think the horror stories we all hear is someone gets a tip from their Uber driver, or they're at the salon, and that tip eviscerates $5,000 or $10,000 of the person's savings.
Yeah.
So there are a lot of companies out there where they can go to zero. But if you understand the business and you're buying something you understand and you're paying a reasonable price for it, and that company's probably going to be worth more in 5 or 10 years, you've got a good chance of success in the small cap space.
Okay, Dave, we'll wrap it up there. Great to see you, and thank you for the information and the idea generation as well. It's great.
Okay, thank you, Catherine. Good to see you again.
Thank you. You too.